April 11, 2025, marked a significant escalation in the ongoing U.S. China trade war. China raised tariffs on a wide range of U.S. goods to 125%. This move comes as a direct response to the existing 145% tariffs levied by the United States on Chinese imports. The tariff battle, which began in 2018, has intensified with no clear resolution in sight. Both nations seem entrenched in their positions, raising concerns about the global economic impact. This latest development has sent shockwaves through global markets, deepening fears of a full-blown trade war. Businesses and consumers alike are bracing for the consequences of higher prices and economic uncertainty. The trade war's ripple effects are being felt far beyond the borders of the U.S. and China, impacting global supply chains and international relations. The situation underscores the interconnectedness of the global economy and the potential for significant disruption when major players engage in protectionist policies. While both sides have hinted at the possibility of a negotiated settlement, the path forward remains unclear. As the trade war drags on, the stakes for the global economy continue to rise. The current tariff standoff is the culmination of years of escalating trade tensions between the world's two largest economies. It began in 2018 with the Trump administration imposing tariffs on Chinese steel and aluminum, citing national security concerns. China retaliated with tariffs of its own, targeting American agricultural products. This back-and-forth exchange of tariffs has become a hallmark of the U.S. China trade relationship. Each round of tariffs has been met with a counter-response, creating a cycle of retaliation that has done little to address the underlying trade imbalances. The trade war has expanded beyond tariffs, encompassing technology transfer, intellectual property rights, and market access. Both sides accuse the other of unfair trade practices and economic espionage. The lack of trust and communication has made finding common ground increasingly difficult. As the trade war enters its 8th year, the economic costs are mounting for both countries. Businesses are facing higher costs, consumers are paying more for goods, and uncertainty is hindering investment and growth. China views the U.S. actions as unilateral bullying and coercion designed to stifle its economic rise. Beijing argues that the U.S. has unfairly targeted Chinese companies and imposed unreasonable trade barriers. They maintain that their trade practices are in line with international norms and that they are open to dialogue based on mutual respect and equality. However, China has also demonstrated its willingness to respond in kind to U.S. pressure. The recent tariff increase is a clear signal that Beijing will not back down from defending its economic interests. They have also diversified their trade partners, strengthening ties with other Asian countries, Africa, and Europe. Despite the tough talk, China also recognizes the potential damage a protracted trade war could inflict on its economy. They are particularly vulnerable to disruptions in the global supply chain and a decline in demand for Chinese goods. China's response has been a calculated mix of defiance and pragmatism. They are seeking to project strength and resolve while also leaving the door open for negotiations. In a significant diplomatic move, Chinese President Xi Jinping has called on the European Union to resist U.S. bullying and work with China to maintain global economic stability. During a meeting with Spanish Prime Minister Pedro Sanchez, Xi emphasized that there are no winners in a tariff war. This appeal to the EU highlights China's efforts to build a united front against what it perceives as U.S. protectionism. The EU, itself caught in the crossfire of the trade war, has been critical of both U.S. and Chinese trade practices. The EU has so far pursued a cautious approach, pausing its own retaliatory tariffs against the U.S. However, the escalating trade war and Xi's call for collaboration put the EU in a difficult position. The EU must weigh its economic interests and its commitment to free trade against the pressure to align with the U.S. China's overture presents an opportunity for the EU to assert its role as a global economic power and potentially mediate a resolution to the trade dispute. The escalating trade war has sent shockwaves through global financial markets, reflecting growing anxiety about the potential for a global economic slowdown. Asian markets were hit particularly hard, with Japan's Nikkei index plummeting nearly 5%. Hong Kong stocks experienced their largest weekly decline since the 2008 financial crisis, Oil prices also tumbled for the second consecutive week, as investors worried about declining global demand. European markets followed suit with major indices like the FTSE 100 CAC 40 and DAX all closing lower. Even the U.S. market, which had initially shown resilience, succumbed to the negative sentiment. The S&P 500 dropped 3.5% on Thursday and is down approximately 15% from its February peak. The U.S. dollar also weakened, reaching a three-year low as investors sought safer assets. The market turmoil is a clear indication of the global economic uncertainty fueled by the U.S. China trade war. Investors are concerned about the impact on corporate profits, global supply chains, and consumer spending. The escalating trade war has intensified fears of a global recession, with economists warning of the potential for a significant economic downturn. Goldman Sachs, a leading global investment bank, estimates a 45% probability of a recession within the next year. The trade war is seen as a major contributing factor to the slowing global economy. The uncertainty surrounding trade policy is discouraging investment and hindering business expansion. The higher tariffs are also increasing costs for businesses and consumers, leading to reduced spending and economic activity. J.P. Morgan Chase CEO Jamie Dimon has warned of considerable turbulence in the U.S. economy, citing trade tensions as a significant risk factor. The UN Trade Agency has also sounded the alarm, warning of a catastrophic impact on developing countries, which are particularly vulnerable to disruptions in global trade. Yale researchers note that the U.S. average import duty rate is now the highest in over a century, highlighting the extent to which the U.S. has embraced protectionist policies. This trend is further fueling concerns about a global trade war and its potential to derail the global economy. As the U.S. China trade war intensifies, other countries are reassessing their trade relationships and seeking to capitalize on the shifting geopolitical landscape. Vietnam, for example, has agreed to formal trade talks with the U.S. and has pledged to crack down on Chinese goods being rerouted through its territory. Taiwan, facing a 32% tariff on its exports to the U.S., has offered zero tariffs as a basis for trade negotiations with Washington. Japan has also formed a task force to discuss trade with the U.S., seeking to secure favorable terms for its exports. These developments highlight the opportunities and challenges presented by the U.S. China trade war. While the trade dispute has created uncertainty and disruption, it has also opened the door for other countries to strengthen their economic ties with the U.S. The U.S., for its part, is actively seeking to diversify its trade partners and reduce its reliance on China. The Trump administration has reportedly engaged in trade talks with over 75 countries. The U.S.-China trade war extends far beyond tariffs, encompassing a wide range of economic and technological issues. China has taken steps to restrict Hollywood film imports, limiting access to its lucrative entertainment market. Furthermore, China has placed 18 U.S. companies on trade restriction lists, citing national security concerns. These actions highlight China's willingness to use non-tariff barriers to retaliate against U.S. pressure and protect its domestic industries. The trade war has also spilled over into the realm of technology, with both countries vying for dominance in areas like artificial intelligence, 5G networks, and quantum computing. The U.S. has taken steps to restrict Chinese technology companies like Huawei, citing national security risks. China, in turn, is aggressively pursuing its own technological advancements, seeking to reduce its reliance on U.S. technology and establish itself as a global leader in innovation. The competition between the U.S. and China in the technological sphere is likely to intensify, with significant implications for global economic and geopolitical power. The U.S.-China trade war presents a complex and multifaceted challenge to the global economy and international relations. The escalating tariffs, market volatility, and recession fears underscore the high stakes involved. While both sides have expressed a willingness to negotiate a trade deal, significant obstacles remain. The lack of trust, competing economic interests, and domestic political considerations make finding a mutually acceptable solution difficult. The potential long-term consequences of the trade war are significant. A protracted trade war could lead to a decoupling of the U.S. and Chinese economies, fragmenting global supply chains and hindering global economic growth. It could also exacerbate geopolitical tensions, undermining international cooperation and increasing the risk of conflict. Navigating the complexities of the U.S. China trade war will require careful diplomacy, economic pragmatism, and a commitment to multilateral solutions. The global community must work together to mitigate the risks of a trade war and promote a more stable and prosperous global economic order.